Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. If you're new here, then you might want to consider subscribing to this channel because we talk about everything trading strategies, market insights, and we share a lot of tips for traders at all levels. So whether you are a newbie or an experienced trader, you have one or few or even many things to learn from this channel. Okay, so without further ado, let us get right into what we have for this video. Okay, in this video we're going to be discussing an exciting topic titled Bank Nifty strategy. If you've ever wanted a simple, effective approach to trading Bank Nifty, then stay tuned. So first things first, what is Bank Nifty? For those who might be new to this, Bank Nifty, also known as the Nifty Bank Index, as we can see here, it represents, it's a sector-specific index that represents the top banking stocks in India. All right. Now, because it is made up of banking giants, it tends to be one of the more volatile indices on the market. Right? It means that it has larger price movements. Now that volatility might make it seem intimidating, okay? That volatility might actually make it seem intimidating, but with the right strategy, you can turn it to your advantage, okay? In as much as the Bank Nifty index is quite a volatile one, you can take advantage of that volatility to your own benefit, okay? Now, Bank Nifty is a favorite for intraday traders due to its high liquidity and volatility, which allows for potential quick movements within a day. When you are trading intraday, the goal is to capitalize on short-term price swings, and that's where a solid Bank Nifty strategy really shines, okay? Now, this index can move a lot, so even small price shifts can translate to significant opportunities for traders who know what to look for. Let's get to the strategy itself. All right. Now, this approach, the strategy that we want to discuss, is simple and ideal for beginners, yet effective enough for experienced traders. We are going to break it down step by step, covering everything from setting up your charts, identifying key levels, and knowing when to enter and exit a trade. So the first thing you need is a reliable charting tool. Okay, you want a clean, easy to read chart, usually a 5-minute or 15-minute time frame works well for Bank Nifty intraday trading. So we are just going to be going to the 15-minute chart, okay, for this particular strategy. All right, now make sure you have your support and resistance levels already marked. It's very important, okay? It's very important to have your support and resistance level marked. So we're just going to do that here. It's important that you identify these levels because these levels are important. They can help you to know possible reversal zones, possible zones of entry, possible zones of exit, like good reversal points to guide you when you are about to make your trade decisions. All right, they are crucial for understanding where the price might bounce or reverse. So you start by looking at the previous day's high and low, or just look at previous candles where you noted significant reversals, and you use that to set your levels, okay, support and resistance levels, as you can see me doing on the chart. Now, technical indicators like the moving averages and the relative strength index are helpful but not mandatory, okay? For this strategy, a 20-period moving average can help you get a sense of the trend direction. So we're just going to be adding the moving average to the chart. We are going to be adding the exponential moving average. Okay, I'm just going to change the settings to 20. All right, we're going to be using the 20 EMA for this strategy. All right, Now, when the price stays above the moving average, it suggests a bullish trend like what we had around here. When the price cuts above the EMA, the 20 EMA, it shows a bullish trend. On the other hand, when price cuts below the 20 EMA, it shows a bearish trend. Okay, the RSI, on the other hand, can help you avoid overbought or oversold conditions. So in case you want to use both the moving averages and the RSI functions as a momentum indicator. It can tell you when an asset is overbought and when it is oversold. All right. So when you have the RSI reading above 70, it shows that the asset is overbought and you might want to consider exiting your buy trade if you are already in a buy trade. Okay. But if you notice that you caught the RSI at the overbought level on time and the RSI value begins to drop below the 70 level, then you can consider selling the Bank Nifty, okay? Because we're talking about Bank Nifty specifically, right? So you can consider entering a sell position right after you notice the RSI dropping below the 70 level, okay? Then when you enter a sell, consider setting your stop loss above the swing high. Like we can see, this is a very perfect example. You can consider sending the moving average, setting your stop loss above the swing high, and then your take profit level could be at the nearest support zone. Or you can also use the moving average to determine your exit, or any other indicator of your choice. But basically, if you're using the moving average to determine your exit, then you have to wait for price to cut above the moving average before you exit your sell trade. Okay, but if you are in a buy trade, perhaps you notice the RSI crossing above the 20 level or the 30 level, and then you enter a buy trade. You can set your stop loss just below the swing low, and then you can target the nearest resistance level for your take profit, or you can wait for the price to cut below the RSI to determine your exit, or the price to cut below the moving average. Sorry, when you wait for price to cut below the moving average to determine your exit. Okay, so it's a very straightforward strategy. Just watch out for price cutting above the moving average, and then the RSI value coming from the oversold territory above the 30 level. Use that for your buy signal, and then as for your sell signal, you wait for the price to cut below the moving average, and then the RSI value dropping below the 70 level from the overbought. That is going to be your sell signal. Then you can use your sell signal to exit your buy trade, and you can use your buy signal to exit your sell trade. All right, so basically that is how it works. Now, once we have our chart set up, the first thing to look for is the overall trend of Bank Nifty. Okay, is it moving up, down, or sideways? If we are in an uptrend, our goal is to look for buying opportunities. And if the trend is a bearish trend, we are going to be looking for selling opportunities. So in this situation where we had a bullish trend, you can see within this zone where we had a bullish trend, this period, we would have considered looking for only buying opportunities, right? And then at this point where we had a break of structure, we can see that we had a break of structure around here. We would have considered looking for only sell opportunities within this zone. All right, here we would have been looking for buy opportunities, here we would have been looking for sell opportunities. So it is ideal that you enter trades in the direction of the trend. All right, it is very important. Now, one effective approach is also the breakout strategy. That is another approach you can use for trading the Nifty Bank Index. Okay, so if the Nifty Bank Index breaks above a major resistance level, and you notice that there is a spike in volume, it often signals a potential uptrend. For example, maybe we had the Nifty Bank, or let's just use this example. We had the Nifty Bank Index break above this resistance level. Around here, we can see that there was a breakout, right? So after the retest, it's ideal that you wait for a retest before you enter a trade in the direction of a breakout, right? So we actually had a retest around here. So we would have considered it for a buy trade right after this retest, and then stop loss would have been below the breakout level, and then the take profit could have been at the next resistance level. All right, Then in terms of a bearish breakout, we have to wait for a retest as well. So we can see that we had a breakout here. We had a little bit of a retest. You can see that. Let me zoom in closely so we can see. All right, so we can see that we had a retest after this breakout. This first breakout, there was no retest. You can see that the price entered into the price entered back above the breakout zone, so it invalidated the breakout, right? But in this situation, we had a retest and a continuation, so we'd have considered entering a sell right after that, right? And then stop loss should be above the breakout level. Make sure your stop loss is above the breakout zone, okay? And then the nearest support level can be your take profit level. All right, now risk management is non-negotiable, okay, and this part could be what makes or breaks your trading journey. Only risk a small portion of your capital on each trade, usually around 1 to 2% of your account balance. All right, Bank Nifty's volatility can be beneficial, but it can also lead to big losses if you don't manage your risk properly. And remember, trading can be emotionally taxing, especially if things don't go your way right away. So stay calm, stick to your plan, and don't let emotions drive your decisions, okay? The key is to trust your strategy and maintain discipline, all right? So there you have it, a straightforward, effective Bank Nifty strategy that is beginner-friendly, yet powerful enough for seasoned traders. So let's just quickly recap. When you want to trade the Bank Nifty index, it's important that you start by setting up your charts. Okay, you set up your charts, you mark support and resistance levels, as you can see I did on the chart. You mark support and resistance levels, and then next you use indicators like the moving averages and the RSI, as you can see, as I added them to the chart as well. You're going to use these indicators to get a sense of trend and strength. Okay, while the moving averages give you the trend, the RSI can add to indicating the strength of the trend, all right? And then next, you have to watch out for breakout points and confirm with volume, or you can decide to just look for continuation patterns. If you are trading in the direction of the trend, you can just look for continuation patterns. For example, here we had a bullish trend, so we could have just considered entering a buy after this pullback, right? So continuation patterns, you can trade continuations or you can trade breakouts, okay? And then next, you have to set your stop loss and targets to protect your capital. Set your stop loss, set your profit targets according to resistance and support zones. Okay, we are going to be using some resistance and support zones basically to determine our stop loss and take profit targets, or you can use the indicators to also determine your exits, right? So if you want to manually exit your trade, you can just use the indicators to determine that. For example, after you enter a buy trade, the buy has been confirmed, you can just decide to wait for the price to cut below the moving average to determine your exit, your buy exit, right? Or you can use the nearest resistance level if you just want to set automatic take profit. On the other hand, if it is a sell trade, you can just use the nearest support zone to set your take profit, or you can just exit manually when you notice price going above the moving average. So if you found this Bank Nifty strategy helpful, please give this video a thumbs up. And don't forget to hit that subscribe button to get more trading insights and strategies. Also, let me know in the comments below if there's anything specific you'd like me to cover in the future. All right. Thanks for watching and happy trading.